Within the growing quality portfolio, many of the stocks have been down over the past 7 days. However, Celsius Holdings takes the crown as it has now even dipped into the $29 range, as it is also now down almost 70% from its 52-week high. Now, some companies had some news, while some of the deadline didn't make that much sense, or maybe even multiple. So let's dive straight into the news of this last week and also look forward a bit because earnings season is about to kick off once again. So next week we will see Domino's report on Tuesday and the banks reporting on Friday. So we will be slightly looking forward at it, see which earnings are coming up and which I find important and will be looking out for. And if you find any value from my videos, either through education or entertainment, make sure to subscribe to my channel so you don't miss any of my future videos. Now, one last thing before starting, and I do find this somewhat of a shame, but I will be postponing my series on the luxury goods market to after earnings season. Because, well, quite simply, I think there will be enough to cover. I think there will be enough news coming from earnings. And in order to also get that series through, get it on a consistent, day of the week, I think will be a bit much. So I will postpone that to after the earnings season, but then I will get that kicked off. Now, let's dive in and let's start with SoFi. Because we got news from SoFi that they will be launching a direct share platform for US IPOs and, capital raises. And this is powered by Primary Bid. And what this does is that it allows either people that help succeed the business or maybe even some of the employees or all of the employees to participate in an IPO. SoFi will facilitate this, and previously this was only done for Wall Street. Now, if we then look at the press release, we can see that SoFi Technologies, a member-centric one-stop shop for digital financial services that helps members borrow, save, spend, invest, and protect their money, and Primary Bid Technologies, a leading capital markets fintech firm, today announced the launch of DSP 2.0. Now, today was Wednesday. An advanced direct share platform that offers a modern and streamlined approach to equity program management for companies looking to raise capital in the US. Now, that's a whole lot of technical terms right there. But like I said, basically what they want to do is allow businesses, companies that want to raise capital or have an IPO to let employees or people that were critical to the success of the business to participate in it. They have launched this platform in order to streamline this process because previously it was done with a lot of paperwork, it was slow, it was expensive, and SoFi together with Primary Bid wants to streamline this. Now, I don't think this is that changing to SoFi overall. It's not like a deal breaker, silver bullet, or whatever. However, it does help. Now, with many of those things, I explained that I see it as those small updates, those small changes that will add up over time. It will make SoFi more accessible, more competitive because they have more platforms, items, products that others don't have. Competition doesn't have this. So it makes SoFi unique. And that is very good in order to acquire new customers and to keep pushing growth. Like I said, it won't change that much for the growth story for SoFi, but it does add a little to it. Now, then I already showed it somewhat, but we had some news for SoFi because, apparently Guggenheim adjusted the price target for Lululemon Athletica to $525 from $350. I think something's going wrong there, and I think it should be the other way around because we also saw this for Starbucks, what I just showed in the intro. I don't really have news about Starbucks, but I also saw it there as I was scanning through the news for my portfolio. But that's a bit weird. Now, there was other news that I do want to actually highlight. That was actual news. And the news that I am talking about is that Lululemon stocks falls on China concerns. Now, what this is, Morgan Stanley lowers Lululemon's price target over concerns of Lululemon's optimistic China growth. Now, there is a twist to the story because they say Lululemon is optimistic, but I think they are quite as well. But I will get to that. Now, Lululemon Athletica stock has experienced a decline following Morgan Stanley's decision to lower its price target for the company. The decision was influenced by the perceived risks associated with Lululemon's growth in China. Now, the China growth for Lululemon has been very strong, but the brokerage suggested that the revenue estimates for Lululemon's China business might be too optimistic. Now, it depends on what you think that's too optimistic. I haven't seen really specific growth targets for China, but of course, they talk to the investment team's relations or the investment relations team, and they might get some more information, which you could get probably if you send them an email, but they will know more probably. Now, what we do know is that in the last quarter, Lululemon had 39% growth in mainland China. So they are growing rapidly over there. Now, it has been even more, but in the last quarter, it was 37%, I believe. Despite these concerns, Lululemon continues to hold a significant market share in China, and this success is attributed to its localized entry approach and premium positioning among peers sportswear brands. Currently, Lululemon is the third largest non-domestic sports apparel player in the Chinese markets. Now, I don't really know what the number 1 and 2 are, but I assume Nike is one of them, and the other, maybe Adidas. I don't know. However, the company faces potential challenges from domestic brands such as Ling Ning, Fila, Xtep, Axterix. Now, don't get me on the pronunciation of that, but okay. Local, domestic challenges or brands that bring challenges. And these brands have been progressively gaining market share in the Chinese sports apparel markets. Okay, so here we have the net revenue change. And we see that for mainland China, we get to 34%. However, in terms of changing cost in dollars, we get to that 37 number. And the growth in this region is very important for the business because if we look at comparable sales from the last quarter, we can see that for mainland China, this was 21%, while in the Americas, it was down 3%. Now, on a constant dollar basis, in the Americas, it was down 2%, but mainland China was up 23%. So mainland China is becoming more and more important to the growth story of this business. Once again, if we see the revenues, they were up 34%. And I mean, if we look right here, we can see how that compares. Because in the second quarter of 2024, the Americas had $1.74 billion of revenues, while China mainland had $314 million. However, the income from operations was relatively high for China compared to that of the Americas, because the Americas came to $617 million, while mainland China came to $119 million. So the operating income for China mainland is relatively high. So the growth there is really important because it is starting to become, well, somewhat meaningful in terms of income from operations. Now, then we had another nice one, because here we have an article saying that the Ulta Beauty Analyst Day will likely be a positive catalyst. Now, one of the last analyst or conference I saw from Ulta was when the stock dropped something like 10% because they announced that they saw traffic slowing down. This immediately dragged Elf Beauty down with it as well. I think this was pretty much around the top for Elf Beauty. But UBS says that Ulta Beauty could set achievable targets during its Analyst Day on October 16th, which will likely serve as a positive catalyst for the company. Now, I think this is true, and I also said this in my analysis of Ulta Beauty. I don't think that Ulta will grow that fast into the future. I think that they have increasing competition and that this will keep increasing. I find it an attractive stock. However, not right now, because there is too much uncertainty around the business, and the stock is still, well, for me personally, slightly too highly valued in order to be a really attractive investment. And by too high, I don't mean that the stock is actually highly valued. Because if we look at a last 12-month PE, we can see a 14.9 number. Now, this is, of course, coming down because, well, I mean, look at the stock year to date. It's also down quite a bit. We have seen prices of over $560. Right now we are at 370. But we see a next 12-month number, a forward PE of 15.5. So we actually see a higher next 12 month, a higher forward PE than we see a normalized PE. That means that they expect earnings to come down. And we can see that in the revenue estimates, right? We see revenue being down 0.3%. However, we see EPS down 10%. Now, this is a trend you don't want to see. And we also have analysts seeing the company grow in terms of revenues of 4.5% and 4.6%, and EPS at 8% and 9.3%. Now, this is looking quite far forward, and it's a bit difficult to say how the company will evolve into 2027, because I do think they have some handles as to what they want to change and how they want to grab the business and improve it. And they have a very, very large loyalty program to help with it. However, for me, this business is a bit too uncertain. And this is also what TD Cowen says, because they cut Ulta Beauty's price target on sluggish demand and stiff competition. Now, the amount of this price cuts, that's absolutely majestic. I mean, this is Wall Street at its best, right? Because the brokerage TD Cowen cuts the retailer's Ulta Beauty's price target to $390 from $395. You can see that, right? I mean, this is what, 1.5%? I mean, why cut it? Why cut it from 395 to 390? That makes no sense whatsoever. Just don't. This is trying to make a news item, right? But they say that there is weaker demand seen in the industry as well as rising competition from retailers such as Sephora and Amazon, and they have been raising margin concern. Now, Ulta has struggled to manage both new and old inventory systems simultaneously, which could lead to increased shortages and put performance of new and emerging brands at Ulta at risk. Now, that transition should be completed. This has been completed in the last quarter, maybe the quarter before. It should be done. That inventory systems should have been completely and fully transitioned to the new system. However, I just cannot say that this company is a buy for me right now. And I would more so side with TD Cowen here than with the opinion that the analyst day could provide a buying opportunity. Yeah, I mean, I will be highly interested in what they have to say, however. I want to see how that transformation is going, how the transition is going, and if they are actually, restating their growth, if the handles that they got, if they work, the plan is working. And that brings us to the earnings calendar. Because next week on Monday, well, in all honesty, there's nothing that exciting, right? The biggest company has a market cap of 1.7 billion. That are just companies that I don't follow. I'm sorry, they're too small. But on Tuesday, we will start off with PepsiCo. Now, PepsiCo is expected to have $2.3 of EPS. And all current market cap, maybe not the most interesting, but $230 billion. Then, as the week progresses and we get to Thursday, that's where it becomes really interesting. Because then we get Progressive, we get Delta, and we get Domino's. Now, both Delta and Domino's will be really important gauges for the consumer. Pepsi will as well, of course, but they are just so large, and Domino's and Delta can actually tell us something about the consumer. Now, Delta is expected to post earnings or EPS of $2.52 and Domino's of $3.62. Now, Domino's is also an important one for me, or an interesting one for me, I should say, because I don't hold the company anymore, but I used to hold it in the past, and I really like the business. But they have some issues. Because this company is one of the largest or the fastest growing companies in terms of share price. Over the past, 20, 30 years, they have been growing extremely fast. And basically what happened is that they just bought back a enormous amount, an absolutely enormous amount of shares. And well, that's kind of saying it nicely, right? Because Jesus, this is even more than Apple does. However, the previous CEO went a bit crazy with it. And as they transitioned from CEO about, what is it now, 2 years ago, the new CEO just got an enormous debt load on his hand. $5.2 billion in debt, while they have cash and inventories of 280 million. They're gonna have to refinance that debt because they can't pay it off, clearly. It's just way too much debt. And with the current interest rates, that's not really perfect, right? But anyway, that's Thursday. And then I think everybody is gonna kind of hold his breath for Friday. I mean, everybody that's looking for a recession, that is at least. Because we will get JP Morgan, the biggest bank of the US. We will get Wells Fargo, we will get BlackRock, we will get the Bank of New York Mellon. I mean, the first really big banks are reporting on Friday. So we will get the actual kickoff of earnings season. And that's exciting. Now, I'm very much looking forward to it. And if you do as well, and you want me or you want to hear my reports on it as much as possible, then make sure to subscribe to my channel. And I hope to see you in those videos. Thank you for watching. Please give it a thumbs up if you liked it. And I hope to see you in my next video.